I have questions regarding the taxation of US persons when they're investing in a Portuguese fund for the golden visa. So someone is a golden visa investor from the US. What kind of taxes do they need to take into account, and what are the rates? In most cases, they would not be residents and they won't be tax resident in Portugal. What's the best way to declare income from these funds, both dividends and cap gains? It'd be great if you can talk about PFICs. Okay. So one of the upsides with the golden visa is that you get to enjoy Portugal, but there's no minimum stay requirement. You can still live in the US or wherever in the world that you would like, subject to the rules of the golden visa regime. But this is not a talk about immigration, right? So from a tax perspective, if it is you don't trigger one of the two indicias that Augusto indicated in his presentation, so you're not going to be here for 183 days or more, and you don't have like your center of life here, then you're correct in your assertion that you won't be subject to Portugal tax. But you're still American, right? So you're still a US person. So as always, you're subject to tax on your worldwide income. Now, you're asking specifically about the golden visa fund. So there are a number of ways of getting the golden visa. One of them is investing in certain funds. Now, as you indicated or you suggested, you're right. Some of them are given a special treatment under the US tax rules called PFIC. PFIC stands for Passive Foreign Investment Company. What does that mean? Well, there are a number of rules in the US tax code meant to address investors who invest outside of the US. So it was a big deal once upon a time for Americans to invest outside of the US and take advantage of the fact that they don't need to pay taxes until there's a liquidity event at the end of whatever the lifetime of their investment is, which is unfair, right? Because if you invest in US Situs funds, you get a 1099 every year, and you need to pay taxes on whatever the dividends earn, even though they may be reinvested. You still need to declare and pay taxes. So the domestic financial institutions within the US, they complain to Congress and saying, hey, foreign financial institutions have an advantage on us. So in the 1980s, under President Reagan, the PFIC rules were created. So I won't get into the details of it. Suffice it to say that they can be quite aggressive if you have a foreign investment, for example, one of the golden visa investment funds, and they're not properly declared. And so you need to, first of all, make sure that your tax team is familiar with international issues. And this is something we do. We are the advisor's advisor. So we often do speak to US tax teams that are very domestic focused and they don't understand the international rules. So there are a number of ways of treating the fund if indeed it is a PFIC. So basically a PFIC is any foreign mutual fund. I'm being very, very general, but if you have a foreign mutual fund, more or less, chances are you need to check to see whether it's a PFIC. There are a number of ways of treating it under section 1291, 1293, and 1296, I think, of the tax code. What you're looking for, some of the funds, the golden visa funds in Portugal, they are designed for Americans. So what they do is they make an election called a QEF election for a qualified electing fund, and they will give you a statement every year. So that's what you're looking for. The ideal is to find a qualifying elective fund. Now, if you don't have that ability to work with a fund that is a QEF and that will give you a US tax statement every year, then you will need to let your tax advisors know, because then the tax advisor that you have will need to create a QEF statement every year, and they'll need to work with the fund to get the data to make it US tax ready. So the bottom line is that it's not a showstopper. I've seen some stuff written online, and it could be a little bit doom and gloom and fear mongering. Don't worry. Once your tax advisor knows what to do, they'll be able to work with you and work with the fund to prepare the relevant statements to make sure that they're properly disclosed on your US tax forms, which is the form 8621, and the relevant calculations done. If the right calculations aren't done, then the PFIC becomes what we call tainted, and some really aggressive throwback rules are invoked. So and they are meant to be very punitive. So you want to completely avoid that. So hope that answers your question. If you're considering the golden visa, do not run away because it may be a PFIC. Just speak to your advisor and make sure that you're prepared to deal with the US tax consequences. Hope that helps. All right.
Darren, just for completeness and with respect to the Portuguese perspective, so in case of income derived from such funds, it depends on, of course, of the nature of the fund, but if it is not related with real estate in Portugal, in principle, what happens is that any income earned by non-resident participants will be exempt from taxation in Portugal. Just for completeness.
Fantastic. Thank you.
Please subscribe, like, share, and comment below. Our books and upcoming events are available at htj.tax. Email us at help@htj.tax to engage us, to advise on international tax or business matters.